Yo, what's up, everybody? It is Wednesday, June 22nd. So we had a little bit of an attempt at a rally today, but it petered out near the end of the day, and I'm not surprised. I am not surprised, and I'm going to tell you why. Here we go again, man. 6 consecutive days of tax-related liquidity drain. Again yesterday, 5.5 billion of drain. In other words, 5.5 billion more of taxes taken by the government compared to how much it's spent. So over the last 6 days, and I've been going over this like every single day, and I've been saying to you guys, I think today we might see a resumption in positive liquidity flows, but it didn't happen. Actually, I'll talk about today. The data I'm giving you is through yesterday's daily treasury statement. It's 1 day behind, right? So the last 6 consecutive statement days, all right, from June 10th until yesterday the 21st, 118 billion tax-related drain. That means the government took away 118 billion more than it spent in. So this is like, I've been calling this the mini April. April was 325 billion. Right now, the deficit for June has shrunk from 164 billion down to 46 billion. I mean, this is the smallest deficit. At least it's a deficit. That's what I could say. At least it's not a surplus. But this is the smallest deficit since May 18th. So it's very, very frustrating and disappointing. It's, I don't know, man, at this rate, I mean, it's like we're going towards a balanced budget. Now again, I'm going to say this, and I know a lot of you probably going to roll your eyes, and I don't blame you, really. I don't blame you, but the rest of the outlook up until mid-September, it should gradually improve, all right? This has been a rough week. Like, I did not expect to see 6 consecutive business days, 6 consecutive statement days now with almost 120 billion drain. I mean, there's no way the economy is gonna, be able to grow on that. And like I said, we're on the cusp of a recession. We probably are going to have a negative quarter, so that will qualify as the definition of a recession. And the irony is, I think I said this yesterday, the irony of this whole thing is that a recession would actually be bullish, but it's bullish in the worst possible way, because, it's bullish because it would trigger the automatic stabilizers, stuff like unemployment benefits and food stamps and Medicare and Medicaid and all this stuff, Social Security, people opting in a little bit earlier than maybe what they thought, because it's a bad way to trigger more fiscal. What we need right now are tax cuts, but that's political, and that's not going to happen. I mean we're what are we? We're in June, so 4 more months till the midterms. The Republicans definitely want the worst economy possible, because that would ensure. And anyway, the Dems are going to get crushed. I mean, they're just going to get crushed. Like Biden, he's still operating with the inflation situation. Oil was down again today, and again, I'm not flipping my position on oil until I see producers in those futures markets, in the oil futures markets, go short. What I was about to say with regards to today, Wednesday, it was a Social Security payment day. So that's a day when typically we get a nice big positive fiscal flow of well, let's see, it's probably going to be around 18 or 20 billion, but look what happened. I mean, it wasn't enough. And this goes back to something I said a few weeks ago when I was making note of the fact that like first of the month payment days. Those are the big payment days. First of every month is when you get, you get Medicare, you get Medicaid, you get military pay, you get veterans benefits, you get disability, you get all those things that are like once a month payments. And first of the month, it's like 100 billion. And I mentioned to you guys earlier this month on June 1st, we had, it was like a 95 or 100 billion day, and the market went down. I mean, historically, when we've had days like that, that's a lot of deposits coming into the economy. That's a lot of cash flowing into the economy, and some percentage of it gets deployed into stocks. That just didn't happen. So that's a reflection of the deep negative sentiment. I think it's a reflection of the level of fear that people have right now about just with regards to the economy, with regards to monetary policy and the Fed, inflation. They don't want to make a move. Now today, again, today was a Social Security day. So it was a fairly big day. It wasn't like a first of the month payments day, but it was definitely, a net 25 billion probably. That's decent. Nothing. Wasn't enough. I mean, we tried to rally and the market gave it up at the end. So, I don't think we're gonna crash down to deeply lower levels. I think we're going to bounce around here for a while. I mean, the positive liquidity flows have to kind of build up once again. I mean, we had, again, I mean, what do we? So June 10th until now, 12 days of negative, of drain. I'm not, when I say 6 days, that was 6 business days. But it's been calendar days, 12 days now of negative drain. I mean, that's almost half the month. It's almost half the month. So this is very disappointing. Now, politically, Biden's probably going to be, trumpeting this. He's going to be screaming this from the highest tower saying, hey, look, I'm cutting the deficit and we're going towards a balanced budget. But you see what happens when they do this. The only way the government can do that, cut the deficit, they got to remove that money from the economy. They got to take it away. They got to suck it out. They got to drain it out. So going back to the swimming pool analogy again, I mean, we were getting up. Like yesterday I said, we were at a peak level in June of 980 billion. Okay, that was what the fiscal deficit, the total fiscal deficit. Now we're about 700 billion. So 300 billion taken away. I said this yesterday. 300 billion taken away since April. And if you look at the market, I mean, that's when we really had the steepest decline in the market. And up until that point, the forecast for the second quarter GDP, including myself, they were positive. I was expecting, of course, I was expecting the April tax drain. If you go back to my videos prior to that, you'll see that I was alerting you guys to the fact that there would be a tax drain, but it would be temporary because the money gets spent right back out. But not really happening to any large degree. I mean, that drain is continuing. Yesterday I said, we're going to get a quarterly interest payment in August, but that's in August. I mean, we still got to go through July. It probably be, all right, there's no taxes due in July. So, I mean, we should have something like 100 billion deficit month, which is going to be positive. But man, I gotta say, this has just been, it's like trying to accelerate a car, but your foot is just heavy on the brake. I mean, you're not going to be able to do it. The foot is just heavy on the brake. It looked earlier in the month, leading up until June 10th, right up until June 10th, it looks like the foot finally came off the brakes, and then it went right back on there again. So I mean, it's, think of that picture, think of that analogy. I mean, trying to accelerate a car, and you got the foot not just on the brake, it's been pressing harder every single day on the brake. So I mean, it's really hard to get any momentum going. Just very hard to get any momentum going. But again, I don't anticipate some dive to deeply new lows. And ironically, like I said before, let me restate it, and it's the worst way to turn the situation around. But a recession actually would be bullish because it will trigger the automatic stabilizers. But that's the worst way you want to see that happen. I mean, you really don't want to see people lose their jobs, for the government to start spending again. The best thing to do right now, really the best thing, would be tax cuts. But that's all political. That's not going to happen. We're not going to get any tax cuts. Nothing's going to happen politically until, really after the midterms. I mean, the midterms, we get the results of whatever happens there, and then you get a new Congress seated in January of 2023. So that's the update for today. I wish I had better news, but we'll see what the numbers look like. You got to do. Unfortunately, this is a day-by-day situation right now. But again, I am going to say that July looks like it'll be better. There's no tax hit in July. And August looks like it'll be significantly better. So I'm still counting on those 2 months, and then running up to the mid-September, September 15th. So you got 2.5 months ahead of us. You got the rest of June. So things should start to improve. But don't expect, I mean, this is just going to be a back and forth, kind of a sluggish market environment. And you have to just understand that that's what the environment is going to be now for, at least for the next couple of months. It should get better, actually. July should get better. August should actually be pretty good. All right, everybody, that's it for today. Wish I had better news. See you tomorrow. Bye.